Welcome to this Killick Explains video, and welcome to the first in a short series of what I'm calling Viewers Ask. I get, you won't be able to see these, I get emails, I get tweets, I get all kinds of things, people saying, I missed something back there, can you explain it? So here we go. This time I'm going to explain, are investment trust discounts a good or a bad thing? And the answer inevitably is nuanced. All right. Now, bit of revision first of all, and then straight to the answer. All right, I need to give a bit of background for those people who are wondering exactly where I'm going with this one. So investment trusts have been called the city's best kept secret. All right, why is that? Well, basically in marketing terms, they can't market on the tube, on the side of buses, in magazines the same way as unit trusts. It's a quirk of the regulation. So lots of people know about unit trusts when they buy funds, for example, or the European equivalent called the OIC. But investment trusts have traditionally been less well known. And that's in spite of the fact that no lesser organisation than Berkshire Hathaway, arguably the most successful investing vehicle in history, is or was an investment trust. Okay, was under Warren Buffett, still is under new management. So what are the basics? Real basics first of all. An investment trust is what? It's a listed company. It's a company listed on, say, the London Stock Exchange, which holds a portfolio on your behalf, you being shareholders who buy shares in the company. So it has a board of directors. An important point here is it's closed-ended. Now, before you fall asleep, what does that mean? What it means is it has a listed share price, it has a market capitalization, and it runs a portfolio of net assets on your behalf. But those two numbers do not need to be the same any more than they need to be for Tesco or BP. In other words, there is an asset base, which in this instance, for a investment trust is a portfolio, all right? But the actual share price of the investment trust itself is decided by the market, just like any other listed company. And that is where you get the thing that viewers have been asking about, or two in particular, you get a discount. Because it is perfectly possible for the market capitalization of a vehicle, one of these listed investment trust companies, to be say 85 million, whilst the net asset value of the portfolio the directors are busy running on your behalf is, let's say, 100 million. So wait a minute, what's going on there? Well, there you've got a 15% discount to NAV, as it's called, to net asset value. So there's a discount, quite a big one, actually. Now, why is that happening, first of all, and then what do you interpret it to mean? The why is a tricky one. I mean, people debate this all the time. I think people have written degree theses on this topic, but in essence, it exists because it can. Thanks for that, Tim. Because mechanically, there is nothing, unlike with a unit trust or an OIC, that glues the market cap and the NAV together. Okay, so the fact it can exist means it does exist, just like for any listed company. Tesco can trade at a discount or premium to NAV and so on. So can these things. But what's going on? I mean, why is that happening rather than what are the mechanics of it? It could be that investors disagree with the underlying investment strategy and are pricing that in. Just like you can look at Tesco and go, I wouldn't do that way, so I'm going to sell the shares. You know, so you get that. There's the fact that some investment trusts can borrow, gear up to enhance returns, and that creates extra risk. Not everyone's comfortable with that. And there's pure sentiment. Stock markets being what they are, discounts and premiums, because the reverse is possible, can open up and close all the time. So, is this a good or a bad thing? It's certainly a different thing. You don't get discounts and premiums with unit trusts, other types of fund, but you do with these. Yes, it could be an opportunity. So here's the good news. Some people think, if I can get the identical strategy through one of these things that I could get through a unit trust, because often the same house run the two different vehicles with the same strategy, why wouldn't I? I mean, surely I'm getting the same deal, but cheaper, at a discount. All right, and there is some logic in that argument. And what's more, if that discount starts to narrow as other people twig what you've twigged, then potentially you're getting a free return. You're getting the 15% I mentioned earlier, plus any performance that the directors managed to deliver with the portfolio on your behalf. So you're getting, performance plus 15% if it closes all the way. Who wouldn't want that? But before you think, well, this is too good to be true, I must run out, find the biggest discounts in the market and pile in, all right? First of all, these discounts can persist, all right? Because if other people don't agree with you, then unfortunately your momentum is not going to be enough to close the discount. In fact, in the worst case, it may even widen, all right? You have to be super patient. Discounts do sometimes close, but it can take a while. And above all, and I say this about tax videos as well, look at the strategy first and the discount second. Don't buy a rubbish investment trust just because it's trading on a big discount. That's a pure punt. That's just a bet on the discount mechanically closing, which may or may not happen. Go for the right strategy, and then if you can get it at a discount, well, happy days. Don't forget, have to mention this with all styles of fund, watch costs. People have often said in the past, the other advantage of investment trusts is they're cheaper than their peers because they don't do all that marketing. Not necessarily the case. Can be, but watch costs. And on that note, I'll direct you to 3 other resources: killik.com/resources, houses other videos, if that was a bit quick. My guides, sitting next to me, the how-to guides in physical and digital format, and also Confidant.